All right, so welcome preppers. It's Marcel here. Let me just break down today's Euro USD trade, and not just a trade, but the whole price action that has happened inside of the session, because you got some questions. So here I am to answer all of the questions and break down the price action for you. So first of all, I just talk about that what the plan was in New York session for Euro USD. Basically, we had a beautiful 50-minute bullish order flow. And here we are at the last recent region. This was the last recent 50-minute leg. And here was an extreme demand. This demand caused really nice volume and inefficiency to the upside, broke the previous structural high point here with this one nice inefficient push. After this, price created a pullback here. Then it created another 50-minute zone that is located here that broke the previous high point again here, or we could actually count this as the previous high point because it wasn't broken with a body closure. These were all just weak abouts. Long story short, we had a new 50-minute demand for right here. And in the markup that I sent you, I said that we can expect a reaction on both of the demand areas. So before the session open, prices already mitigated this demand right here. And by the exact time I sent, sorry, ambulance. Sorry, I just closed the balcony door. So here I am. Okay, so when I sent you the markups, price was exactly at this region and already mitigated the demand and created a change of character here to the upside. But all of this movement was a pre-session lunchtime movement. And I even marked on the markups that this will be a lunchtime zone, which will be broken. So at this region, we had liquidity too. We had liquidity, perfect liquidity trend line built up for the extreme demand. Here, basically 3 touches of this trend line, perfectly equal touches. First touch, second, third touch. All of the touches created a really nice push away, nice push away, nice push away, nice push away. And all of these 3 touches created, and not just created, but did put lots of money into the market. And if this liquidity is getting swept out and the demand is getting mitigated, we can expect on a reversal movement, we can expect on a change of character to the upside and the long entry opportunity. So basically, this was the original plan, because by the time the session was opened and this candle, prices already broke below this demand region and created a flip of it and also created the sweep of this liquidity. So by closing out the first opportunity, which was the confirmation of this demand, we only had one more opportunity, which was the confirmation of the next demand region. So this was the only plan we were focusing on this session on Euro USD. So let me just play price forward, showing you what has happened. Basically, price just perfectly pushed the liquidity into demand. And after a demand mitigation, we just witnessed something. Let me just play it forward. So we witnessed this movement to the downside that actually on the 1-minute time frame broke below the demand, but we know that we don't count the 1-minute breaks of 50-minute demand areas, right? We know that if the demand is on the 50-minute time frame, then we are counting the break on the 50-minute time frame. If price breaks below this demand on the 50-minute time frame, then it's a break. If price wicks below this demand on the 50-minute time frame, then it's a wick below. And what can we see right here? We can see that price just simply wicked below with this 50-minute candle of this 50-minute demand, so it wasn't a break. And at this time, I sent you a markup update where I stated that if this 5-minute supply right here holds price and creates a change of character to the downside, then we can take shorts. If the supply region breaks to the upside, we will be able to take longs. And this was the plan we were focusing on at this region. And this was all updated. I mean, I sent you this in the form of a markup update. So you've been all updated by what the plan is. What do we know so far? We know that price wicked below this 50-minute demand, meaning it swept more liquidity from below this region. We know that price swept insane amount of liquidity into the demand. And we know that price closed inside of this demand on the 50-minute time frame. So we had 2 opportunities, as I said, change of character to the downside shorts, break of this demand, sorry, break of this supply longs. These were the scenarios that we were focusing on. So playing price forward, what has happened here? Price was inside of this supply, but after this reaction and after all of these reactional candles, price flipped the supply, right? So here was the first flip. And with this first flip, the first entry opportunity came, which unfortunately I couldn't take because I wasn't fast enough. I was planning to set a limit order immediately, but I wasn't fast enough to set a limit order there, so I missed a trade opportunity here. And I saw that this was a discussion in the EURUSD chat that you couldn't agree that if it was a valid entry opportunity, it wasn't a valid entry opportunity. Let me tell you that this flip area right here was a valid entry opportunity. Right here, this is a valid entry. And because let me just play price a little bit back. At this region, price just simply broke through the supply with this momentum candle. You can see that lots of money has been placed into the market on this candle because it's a really nice candle without a wick on the upside. So it just simply started a straight push to the upside. At this region, when I saw this break and I saw the candle closure, I just immediately started to look for the entry. And I was planning to set a limit order here on this demand. But as I said, unfortunately, I wasn't fast enough because by the next candle, it has been already filled and the order has been already fulfilled. So I couldn't set a limit order. I've been missed out from this trade, but it was a completely valid trade because the flip has been initiated by this volume candle and the volume and the inefficiency has been filled up right away with this candle. In this case, what can you do? In this case, you can't use this candle anymore. This is not a flip zone. This is not a demand anymore because the volume has been already filled by the next candle, meaning the entry has already happened, meaning you can't reuse this demand for your next entry. So if you miss this entry, and then, you're missed out from the trade, you have to focus on the next opportunity. And if you call this trade, then it was a completely super valid trade because you saw me, if you're actively checking my recap videos, you saw me taking these setups. If I can catch a setup like this because I'm fast enough to set a limit order, then I'm in this trade. I would have been in this trade also if I would have been fast enough to set a limit order here. But once again, this right here was a completely valid trade because the flip has happened with this momentum candle, which has been filled up right away with the following candle. And that's the end of the story here. So after mitigation of this demand, price just started to push away from this. And here at this region, I just saw another zone, which was this one right here. This zone right here, this demand area, has caused the break of this high point here and technically caused another flip. Here was I will just simply type break and caused the flip of this supply also because it reacted on this supply region. So it was a reactional demand that has caused the flip of this supply and caused the break of the previous structural high point. And I would call this high as a structural high point because this is a less recent structural high, less recent structural low, a new less recent structural high and the new structural low. I wouldn't really call this as a structural high point because it didn't really create any pullback. This is where the pullback has been created and this is where the low has been broken. So this was just a simple supply, right? This is a structural high. So this demand initiated the break of the structural high point. At this region, I was looking at to enter here on this demand. And actually, before I could enter here on this demand, another entry opportunity has been formed. And the entry opportunity was formed here because there was a new flip region. So here was another supply. Here was another supply. And this was a really important supply because this supply initiated the break of this previous demand. So if you take a look at this one, this supply was the one that has caused the flip of this 50-minute demand. So this overall movement flipped the 50-minute zone, meaning this 1-minute supply is pretty important to us because it could flip a 50-minute zone. And what has happened here, we can see a price reacted on this supply, created a pullback, and from this doji candle, from this reactional candle, price flipped this area and flipped the demand flipping supply, right? So this was a demand flipping supply, which has been flipped by a demand again, meaning I was looking for a long here. Technically here at this region, I was planning to open a position, a risk split position, both on these areas. Actually, I had a risk split position on this area and on this area because technically this was a continuation setup. Why was it a continuation setup? Because a first confirmation setup has already happened here. So price already confirmed the 1-minute order flow that was leading to the upside. The order flow was already confirmed here, and the first confirmation setup has happened here, meaning everything that happens above it will be a continuational setup, right? And here comes the continuational type 1 trade that I took because it was a perfect continuation type 1 trade that I executed here. As I said, first of all, I was looking for a risk split entry because this is what the continuation setup, continuation plan states. You can split the risk in between the decisional and the extreme zone right here. And if price forms a liquidity for the decisional, then you can simply use a only limit order on the decisional because the liquidity significantly higher the chance of the mitigation and the reversal on this decisional area. So as I said, at this point, I had a decisional order here and here. I was waiting for a tag, but price created liquidity. So liquidity has been formed right here. Really nice amount of liquidity because you can even see that price created an aggressive push away from this bottom. volume candle has been created, and another aggressive push away from this bottom. Really fucking big volume candle has been created. So liquidity has been created. At this point, I just simply remove my second order from here, because this was, you know, where I did split the risk. So I just simply did place the second half of the risk right here on this demand area. I used the 2.5 pip stop loss. Actually, I wasn't really planning to open a position here and here also with the risk split, because there was liquidity, and I was trusting this liquidity. Price aggressively pushed away from the demand reaction, already created the confirmational setup, and already formed the continuation type 1 setup, which I will attach soon. Let me just find the picture and attach it here. Here it is. This is the picture, the core picture that Robbie posted for you. So everything is the exact same thing that has happened on EURUSD, but you know, this is just a short example and not a long one, but the concept is the same. So the change of character entry has already happened here, as it has happened here, you know, on EURUSD. So the confirmation has already happened. If a confirmation happens, we can apply the continuation scenario. So we can look for continuations. What has happened here? Price broke structure. You know, on EURUSD, it also broke structure, broke the structural high point here. Then what has happened? Let me just pick up the draw tool. What has happened? Price reacted on an opposite-sided zone and flipped this area with this movement and created liquidity for the flip zone. Guess what has happened on EURUSD? The exact same setup has happened here, because, you know, after the confirmational setup happened here, price broke the structural high point here. That's why I marked out this area. Then it reacted on this. Then it reacted on an opposite-sided supply region reaction, broke this supply, and created liquidity for the entry for the entry demand here. So basically everything that has happened here is drawn on this picture. So if you memorize this picture, and if you learn our concepts, and if you're actively learning our concepts, then you should have used this entry, because basically it was just a simple textbook opportunity of this picture drawn here. So yeah, that's why I use this entry here. I just did I can't speak. I just did set a limit order here. You know, I removed my second half of the risk from here and placed it here. So I used 1% risk on this trade. And yeah, guess what has happened? Price tagged me in, but not on TradingView. Here on TradingView, it was a no tag. But if you check the Discord New York updates channel, you will see that on Metaphor, it has perfectly tagged me in. I just simply clicked on this setup. I just copied the entry price. I just pasted it into Metaphor. And on Metaphor, it perfectly tagged me in. I mean, it was an exact tag. But here on TradingView, it wasn't a tag. But we don't care about the TradingView tags, because on Metaphor, I've been tagged in. So yeah, technically, I was targeting this high point. This was my target point, because it had 1 to 5.72 risk reward ratio. And yeah, it was running pretty well. It was running up to my TP almost. I was in like 4.5K, $4,300 profit right here. Then it pulled back a little bit. Then it broke this high point again. Then it pulled back another time a little bit. Then it created this new high again. And that's when I decided, exactly at this candle, when price almost reached my target point here, at this candle, it pulled back to something like here. And I closed my setup somewhere around here, because I was at like almost 5K profit here. I was almost in $5,000 profit right here. It was like 4.7, 4.8. And I wasn't really going to risk 5K profit for a remaining $200 profit that was in between this high point and in between the TP point. So if I would have let it run, then I would have gained 200 more profit right here. But I wasn't going to risk that 5K profit, already floating profit on this setup. So I just manually closed my trade right here, because I didn't really want to risk it. So yeah, basically after this one, price went back down to my break-even point. Here it did hit my break-even point, but it couldn't hit my break-even point because I already closed this setup right here. I even stated in a New York update that I closed my full position because I didn't want to risk for $200 more profit. And yeah, basically that's the end of the story. That's how I took this trade on this simple continuation entry type. It's a simple type 1.1 entry type, continuation entry type. And yeah, hope this recap was helpful for you, because yeah, I saw some confusion in the group today. But after this video, I hope your confusion is cleared, because this trade, this setup was crystal clear. And if you're paying attention to what we post, if you're paying attention to our contents, and if you've learned everything from the core concepts and from the video course, you could have used this setup. And some of the members took this setup, and actually congratulations to them, because it was a perfect concentration type 1 setup. So yeah, that's it, guys. Wish you a beautiful rest of your day.